Welcome to another episode of the Broadstreet Update in association with SCM Capital. The show is all about updating you about the equities market, about the money market, everything about investment, finance, and how to achieve financial independence. And I'm happy today, this is another episode, and a quick one. Would like to appreciate you for the feedback that we got from the first episode. It was rousing and there were a lot of positive feedback, and that's the energy we need to keep going. And so we promise you that week on week is just even going to get better. But I want you to do something for us. In case you're watching us and you're not subscribed yet, please subscribe to our YouTube channel. It's scrolling on the screen, and also follow us across social media platform for the B360 TV and SCM Capital, so that you can get information, education, all the content that we have for you, so that you don't miss out on any of it. So please make sure before you move, do the needful. And today I'm excited to have Jide again with me. So Jide is my co-anchor and is the head of research at SCM Capital. So Jide Downsy, thanks for showing up again. It's been a raining morning, and
of course, yes.
Yeah, it's good. We're in the season.
The market is also raining, so
okay, that's good to know.
Yeah.
So what's the update? What's happening in the market now? So let's just do like a recap of the week or what has happened. Unfortunately, we couldn't come through last week because of the holidays and all. Yeah. But maybe you can just pick it from last week up to now and just give us a general rundown of how the market has fared across different asset classes. Yeah.
All right. Thank you very much, and good morning. It's nice to be here again. Yeah. Let's start with the equities market. In April. April was a very fantastic period for the equities market. The market gained actually 20.46%, and that's over 26 trillion naira added to the market capitalization. So what that means is that the market received a positive rally, or we'll call it a bullish run in the market, when there is a consistent gain like that in the market. And this is owing to the fact that we have this liquidity in the system. We have this positive sentiments and momentum across the spectrum in the market. All right. And of course, yes, the macroeconomic fundamentals are also very positive and supportive of the market as well. So year to date, from January to April, the market did 55%.
Wow.
Which is very fantastic.
That's
Nigerian market, yes, exactly. Equities market. Of course, yes, you have so many things supporting that. The fixed income market, the yield is not attractive because year to date, you hardly have a difference of about 100 basis points in the fixed income market. And when you look at even the offer size of the federal government and various other papers that are coming in, they are not that enough to absorb the liquidity in the system. So where you can have a yield of 15% on the average for fixed income federal government bonds, and you can make more than that in one day, the fixed income market, the equities market. So you see how they drove the people moving down to the equities market in April. But this May started with a bit of a contrarian effect where profit taking were done. Okay, so in the first week in May, which we have used, we saw the market normally had to behave that way, where it has to cool up. So there's a bit of profit taking, and it allows new entrants into the market. It allows for price discovery, and it allows for the market to behave in the normal way it should behave. So that is what we see. So it's not a time to panic. We are not experiencing a bubble or a bust, rather. It's just a normal market behavior where people have reached the high and need to calm down and then see an opportunity sometimes again where they can come in. So it's still a very interesting market, still a whole lot of supports for the markets to date.
Okay, so that's very fantastic. So what would you like us to highlight this week in terms of maybe topical issues or company? So, for example, I know that last week UBA came out with no dividends or something, you know, and it's like people were furious and all of that.
Exactly.
And so, would you like us to walk us through maybe what happened? At the other end, I think Zenith was really raining a lot of cash.
Yeah, of course, yes.
So can you walk us through? And there are several highlights. I can see, I think I received an email prompt to say Presco financial report is out.
Of course, yes. Of course,
and all of those
virtually
things.
all of them release their financial results.
Yeah, so can you walk us through some of the major company highlights, because it will impact into understanding what's going on in the market across different sectors.
All right, thank you. Let's start with the banking stocks. Because it's quite very liquid, and there are some we call it tier 1, tier 2, and others like that. Yeah, for UBA, Access Bank, they didn't pay dividend, and the reason is not that they are not making profit, right? It's just that they have some certain things in their financial statements that needs to be taken care of within that period. Okay, so their non-dividend distribution is not as a result of poor performance, but as a result of regulatory control, which is normal within the system. Of course, yes, the kind of investors we have will probably be thinking of dividend over time, but in terms of capital appreciation, that will have also compensated for that. And in terms of the future growth as well and the prospects of the company, they are still very much in good book. All right. So what happened is this. All right. The bank has what we call the core business operations, which is their lending and the rest like that. So they were able to grow their loan book, and they were also able to achieve a year-on-year increase in their interest income. All right. However, when you get to the mid-table, the likes of the impairments for those loans and the likes of the extraordinary gains which they made before now, like the revaluation surplus and the rest like that, the revaluation gain, the effects and the rest, those things were not evaporating in their financials, right? So those were the reasons why year on year in terms of their bottom line seems to be lower compared to last year. All right. And the regulatory forbearance in 2025, the CBN came up with the fact that they had to clear their regulatory forbearance in terms of their exposure, single obligor exposure. Some of them had some bad loans which they had to clear in 2025. So all of these things are contributed to their non-dividend payment. However, in terms of their balance sheet, they still have the balance sheet strength, they still have the size, and they have that projection to go into the future. Of course, there's some banks have been able to scale that hurdle. In that of Zenith Bank, were able to scale that regulatory hurdle before now. GT was able to also scale those hurdles before now. But the likes of Access, the likes of UBA, they were not able to do that in They cleaned it up in 2025. So that was what was responsible for that. And again, one of the major highlights that came up this week as well for the bank is that the CBN said that there's a section in the BOFIA, that's the Banks and Other Financial Institutions Act, that says that no bank should invest more than 10% of its shareholders' fund in a foreign investment, foreign banks and the rest like that. So Access Bank was also exposed in that regard. They were in Zambia, Tanzania, and the rest like that. So they have to start winding down some of those investments overseas. So those are what is contributing.
So what will happen to UBA now? Because I know, if I'm not mistaken, that they said about 50% of their revenue came from outside of. Which of them? Is it GT? One of the banks?
No, it's not. It's
50% of revenue. Okay, revenue will be different from investment.
Of course, yes. It's not, but revenue is different from investment. Revenue is as a result of operational performance, all right? Yeah. So investment is the value that has been actually placed in those firms and the rest like that. So it's no cause for alarm. Now, like we said, these banks are now moving away from their windfall eras of gains to a more operational gains that they are having. So what has happened in the past will now remain in the past, and we'll begin to look at the future as to what they are going to be doing, looking at what the financials are now, their core business operations. So for the banks, that's very strong. Temporary setback may happen, okay? It happened to MTN as well. It happens to some of these fast-moving consumer goods. They were not able to pay dividend in 2023 and 2024 because of the negative shareholders fund. But these banks still have all of those things. They have positive shareholders funds. They have all of these things. But because of the regulatory actions around their operations, that is why they were not able to make that dividend this particular year, of which most of them have promised to return to dividend payments as soon as possible, which is 2026 or 2027. So that's for the banks. For the other sectors as well.
So let's do insurance.
Okay.
What's happening now again with their recapitalization that's coming up? And what have you? What's your general overview of the market? I know that the last time we reported it was on the low, or probably on the negative. So has anything changed? What's the implication of the new the paid up capital requirement? How is it going to have an impact on the industry, the possible merger and acquisition of people not meeting up and all of that? Just like a walkthrough of that particular sector.
Okay, yes, for the insurance stocks, yes, investors are still not too positive around their performance, because when you look at some of them that have released, the performance is not as interesting as other sectors. Coming to their recapitalization is going to help their balance sheet. It's going to help them take some risk more than they have been taking before now. All right. So, and when you look at how much they are going to be raising, it's not that much, 15 billion. A bank or PFAs can actually absorb them and the rest like that. So they are in good shape. All right. It's just that they still need this openness within the market. They still need to convince people that insurance business is a good deal and it's an environment where people can thrive anyway. So it's going to help their balance sheet. This recapitalization is going to help them. And I believe that as soon as they are done by December, you will see. One of the reasons why we don't see that tractions in their stock price now is because of that recapitalization as well. People need to see how much are they coming out with, what's going to be their EPS, what's going to be their PE ratios and the rest like that. So they want to know how much you're coming out with, and they'll be able to buy into that and then look at the future prospects
but
for the insurance.
what's actually happening, because at some point I know the insurance stocks were really doing well. At some point, of course, by default, they typically are always penny stocks that sense, But at least net they were doing well. But it looks like things have deteriorated in the industry. Maybe that's a reflection of the economy. In any case, I think that their total addressable market is quite different from the banks, where everybody, even if you don't have money in the bank, even your 500 naira is there. But insurance looks to me like a rich man's offtake.
Exactly.
And probably the only part of insurance that will work will be a third party. How much at the end of the day, how many people owns car vis-a-vis the total population? Then it will be most of the corporates by default, because they are much exposed. But you go to a typical man. That's why you see that insurance guys over time, they've even crossed the line into investment.
Of course, yes. Of course.
As against what they're supposed to be doing, which is just pure insurance. They have to just think outside of the box. But in terms of that, it's still not as it's supposed to be.
Yeah, sure. And no, they are not doing badly, actually. They are not doing badly because they had some very good momentum in 2025, 2024, when that hat was signed. The new insurance was signed. So it gave them a whole lot of traction during that period. As it is now, they are still not doing very badly, all right? It's just that investor sentiment favors more of the banks in terms of liquidity, because take for example, how much is what's the number of the outstanding shares of the insurance company grouped together compared to just one bank as well. So, and that is, people will go to where the liquidity is, people will go to where the money is, where the return is, okay? Unlike sitting down to say, want to stay out for like 10 years and the rest like that. So when you look at the environment, the global environment, or even the Nigerian environment as well, you will see that people are not committing funds to a long-term investment. They need to do this investment within 6 months and 1 year. And the insurance companies or the insurance stocks won't give them that appreciation that you are looking for. So that's one of the reasons that is actually disturbing the insurance business. And just like you said as well, how many people taking up insurance, all right? Nigeria or the emerging market environment, it doesn't really favor insurance. When you go to the advanced country, you will see property insurance, you will see life assurance, you will see it's mandatory, you understand? So they take up a whole lot of risk. But right now, it's not that interesting within the Nigerian market. However, their stock price is still doing relatively very well within the markets.
Yeah, but in contrast, of course, then we talk about the energy index, the market generally, they are having a good run, very, very as far as I know.
Very, very good.
So what's happening? What should we expect? What's something new in that is exciting?
Okay.
Apart from the usual, of course, the Aradel, the Seplan.
Oh, yeah.
What else can we look at?
Dangote is coming in. So that's one of the big news that we're still expecting in that particular sector. Yeah. As long as this energy crisis in the Middle East still lingers and the oil price still hovers around $100 per barrel, you will still see positive signs within the oil and gas space. Right. And then the Nigerian market as well. The Nigerian oil and gas industry too is still receiving some positive momentum from the IOCs and the local investors as well. And so production is being upscaled as insecurity around that area is being reduced day by day. And then the crisis that is happening in the Middle East is also favoring Nigerian market as well in terms of, the Nigerian oil and gas industry, because those who are supposed to have taken their oil from the Middle East, they're coming to Nigeria. So revenue will be up, right? Production revenue will be up. The margin will continue to remain very interesting and relatively very high. OPEX, we have not had any pressure in terms of the prices, in terms of our inflation and the rest like that. So that will also support the bottom line of this oil and gas industry. All right. However, there's something what we call price for perfection trap. That may also be happening because when you look at the price of surplus, as of yesterday, it was 11,400 for a unit of stock. So investors will now be looking at what is in need for me for surplus compared to how many units of Zenith will I buy or UPA will I buy and the rest like that. So that mentality will now be coming in that, okay, how much will surplus pay me in terms of dividend at the end of the year? So what's the dividend yield? 2%. What's the dividend yield for Zenith Bank? 8%. So you now want to favor within that space, irrespective of what they will be releasing. You understand?
That makes sense.
So that's exactly how investors will be beginning to think within that space. And again, most of them are not that liquid. If you queue for 100,000 units of ARA,
that's what I wanted to say. Exactly. That they're available for
exactly. So it's not really very liquid. All right. So like Seplat has over 85% of its outstanding shares listed on the London Stock Exchange. So the remaining in Nigeria, people are holding on to that as well. So they don't release that. So, and if there is no liquidity in that space, so even when you have the price appreciation there, people just look at it and say, we can't get it. So let's look for the ones that is already readily available where we can enter and then exit from that market. So that's just basically.
So let's look at consumer goods. How is it doing now?
All right. So, consumer goods is aided by the buying capacity of the populace, and Nigeria has the broad consumer market. All right. I think buying capacity in terms of the purchasing power has improved slightly within the Nigerian space. So year on year, it's been very interesting for their financial statement. Though most of them did because of what happened in 2024, the 2025 situation with the macroeconomic environment. All right. So most of them are now gradually returning to profitability, but they have a very good opportunity going into the future because the environment is now stable and businesses are now thriving. Now, some of them are entering into the season where they will be in high demands. All right. The food, of course, their selections will also support all of those things, campaigns and the rest like also supports that. All right. So for the fast moving consumer goods, they seems to be inelastic because people will continue to be in demand for some of these goods. Okay. It's just that their per share data is still low, right? Because of they are trying to come up from negative to positive. So, however, going into the future for them, they have a whole lot going for them, right? When you look at their year on year in terms of cost of goods, the increase is about 2%, 3%, whether their revenue went up by 25%, 30%. So that tells you that the cost to revenue is getting lower by the day. All right. And that will strengthen their various margins. And at the end of the day, investors will begin to see much positive signs and gains together from that particular environment.
So let's just now lastly look at, before we move to other issues, to look at their cousin, the industrial goods.
The industrial goods, yes.
So what's up there?
Yeah, the industrial goods. We have those who are the cements, we have those who are the paint industries, and a few other ones like that. Yeah, so the market, as we speak now, favors the cements and those ones who are supportive of the cements as well, right? And why? Because even this season now, you need more cements because of the rain and the rest like that. So they are doing well, right? And their revenue is up year on year. In short, I was looking at Dangote and I saw that Dangote Cement, this is the first time in 2 years where their production, they sell, the volume increased. Do you understand? Before now it was going down. So the volume has increased, and it shows you that even with the price action moving from 8.5 to about 12,000 to 30,000, so the price action has also supported their their revenue as well. So the bottom line is also going to be very interesting, and their distribution, you see them making very interesting distribution going forward. So, and even for the paints industry as well, this is also the time for people to start seeing their paints in the houses, and some real estate is popping up in VI, Lekki, and some other areas as well. So they are also doing very well. Now, one thing we know with the Nigerian market is that the valuation currently we are seeing, and it's a new high in Nigeria. Because when you check the historical valuations, you will see that they were trading before now at maybe 2 times less than what they were doing historically. However, when you compare that with other markets within her group or within our range, the emerging markets, the South African markets, probably some other markets, maybe China, India, and the rest of that, you will see that Nigerian market is still trading lower. Which gives opportunity for investors to make reasonable margin in the markets.
That makes sense. So let's look at the fixed income sector. What's new there in the last maybe 2 weeks thereabout, or the general performance as it were?
All right. So yields remain relatively flat in the fixed income market in the last couple of weeks. All right. When I say relatively flat, there is a bit of volatility there. However, you didn't see that traction because investors' focus have been more on the equities market than the fixed income market. And when you look at the offer size as well, the last offer size from the federal government, Treasury bills on Wednesday, was 700 billion. And we have about 2.7 trillion chasing that just 700 billion. So it tells you that there are people who wants to buy and those who want to sell. They are holding on to just a few units and say, this is what we want to push out. And at that point, you start seeing the yields going down. All right. And for those managers, money managers, fund managers who thrive more on yield, when they can't get the yields they are looking for, they rather have to go to the equities market or other market. So that's why the fixed income market seems to have been relatively very quiet this particular period of time. We were expecting that the budgets that the federal government, the new budget, all right, that has a deficit of 32 trillion will begin to filter into the fixed income market, where we'll have a large size offer in the market. However, we have not seen that as we speak, which shows that government is getting funds from other environment to support the budget. The fixed income market now remain the way it is as we speak. And the level of money in the system, as at yesterday, the system liquidity is around 6 trillion. All right. And the fixed income, the entire financial market has not been able to absorb that particular money. So that's why you continue to see that traction in the equities market. All right. And more money will continue to flow as well into the equities market than the fixed income market.
So I think one of the appeal of fixed income is the fact that you can get your profit upfront. People use it as a strategy where, if I have $1 billion, let me go in first at 17, 18, collect the 180 million and go out and now play equity. And my money is saved there. I can use my profit to pay around it.
Exactly. Yeah, you do a back end or you front load that. So depending on the agreements you have. However, if you are a fund manager and you see your reports every day, your peers are doing 30%, 50%, 25%, and you are still reporting 10, 14%. So it shows that you are not performing very well. You understand? So, and when you look at the kind of funds that are being pushed out daily within the capital market space, there are more of equity funds because that's where the stock is.
I get you.
The fixed income market seems to be more of defensive, all right, because your money is not moved. All right, you know where your money is safe. There's no volatility there. You know what you're going to earn at the end of the day. However, by the time you place this on the table with your peers, you'll see that you are underperforming, and this is where the direction is. So you also will not want to miss out of the direction, and that's why that in fixed income market, there is no big play within the fixed income market. So equities market continues to receive that.
Okay, yeah. So talking about performance, I think let's come in now and begin to do some kind of review of your current portfolio or offerings at SCM Capital, starting from the money market fund. Do you would like to walk us through? We'll talk about money market, we'll talk about Frontier Fund and some of these other funds. What are their performances year to date, or start of financial year till date. I know for Frontier, the start date is July 1st, isn't it? That was last year.
Sure,
so we're approaching a full 1 year run.
1 year run, yeah.
It's good for you to actually walk us through what has been the situation, your money market fund, what's happening there, which other 1 or 2 funds can we highlight within the group, and so that people are aware of what is possible, you know.
Okay. Yeah, let me start with the money market fund. The money market fund is a basket of the CPs, the treasury bills, and the bank placements as well. All right. So on the average, we currently have about 19% yield in terms of the money market fund. Yeah. So that's comparative with that of the treasury bills yield as well that you can get within that space. All right. We have a frontier fund as well, which is equity based. Okay. And of course, yes, with the level of the equity market, what the equities market is doing now, we are really very, very huge in terms of that particular environment. Okay. So, one thing about the frontier fund is that, is open-ended. All right. So you have to buy from the manager and they create the units for you and they will be able to sell as well from the manager. But it's a very interesting fund. Yet today, I can't be able to pinpoint what exactly has been done, but
because when I was in the office the other time, they told me 84%.
Of course, comparatively, sure. So
that's a lot of
yes. Of course, the underlying asset is the equities market.
The equities market.
With that, and the buckets of the kind of equities we put in there also gave us that opportunity to see that. All right. So one thing that we can pride ourselves with is that we have the research team that does in-depth analysis and the management team that is also understands how the market works and the rest like it. So that has supported the fund significantly. Then we also have the oil and gas fund. We call it the NESF, Nigerian Energy Sector Fund.
Okay. Is that available at the moment? Because I know that I think that stock is pretty, that particular whatever, but what I heard, is it not the one that, because I was talking to one of the fund managers and they're saying that it's not even available, that people are holding on to their units.
Of course, yes. People, we talked about the oil and gas that it's not that liquid. People want to hold on to that unit. And of course, yes. Like the Harade that has done almost 130% year to date. The Seplat has done that as well. So nobody wants to let out its cash cow into that space. Okay. But if you're lucky enough, one of these days you can get as well. All right. Yeah. So maybe that's one of the reasons, because it pays a whole lot in terms of dividend distribution at the end of the year. So,
I get you.
Yes, so that's just it.
So how does it even work? When you say dividend, it means that you still hold on to the units.
Of course, yes.
They just pay you the dividends.
Yes.
That's crazy. Yeah. But is that how Frontier works? No,
that's how Frontier works. No, that's
so you still hold on to your...
Yeah, it's just like you are buying stock as well. You hold on to the stocks and they give
it's
you
a dividend. So it's a dividend base, except you want to liquidate the entire portfolio.
Exactly.
So it's a very solid source of income.
Of course, yes. Very solid source of income. And that fund is open to those who are very skeptical of what the equities market will do. So you can then buy into those funds and see and go and relax, because you don't know the stock pick you want to do. Because you are not good in terms of research and the rest.
You have no business, trying to pick the stock. Almost like you're trying to game the market. If that's not your daily job of, you have the requisite knowledge, then it just makes sense to look for for portfolio managers that can do that for you.
Exactly.
And you still have better traction even than if you were to do it.
Yeah, exactly.
Because remember that the 2008, 2004 stock boom, from 2004 exactly to when there was a bust in 08, 010, they were based on the fact that people were trading themselves.
Exactly.
So everybody were just playing the speculative game.
Exactly.
The market fundamentals were not there. So it's almost like the market was turning to a Ponzi scheme.
Exactly.
But I think people are calmer now. People have lost money anyway.
Yes.
They lost money in that circle. I know somebody that actually sold the land at maybe some million, put it into the market, and really, like the Gen Zs will say, chop beans, seriously.
Exactly. They lost money. But right now, we have to appreciate it, like the level of financial market infrastructures that we have now, and the knowledge as well. So even if you are going to lose money, except that you are completely out of circulation, that's when you can lose money, because once you start seeing the trends, you'll see a whole lot of noise around that this thing is going to do this, this is going to do that. So you can take your money out of that. And again,
But you know that most information are not, by the time, like they said, by the time somebody, how you know that you've made a wrong investment decision, or how you know that maybe an opportunity has moved, is when the taxi man taking you from the airport is telling you about the scheme. What I'm saying is that, I'm just saying that to say that there's always the first advantage about information.
Of course.
At the time some of this information gets to the market, people have moved and have cashed out. So I still think that, you know, the thing is that just play safe and just do the portfolio, find competent portfolio managers like SCM Capital and just pitch your tent with them and you're good.
And you're good.
Focus on your focus.
You and know, let your money continue to work on its own with the managers
that's my general advice to people.
Exactly. Most times people tend to follow the noise instead of understanding what exactly it is. Also, yeah, exactly. So that's why we have professionals to guide you through what you need to do. Even if you want to trade on your own, you still have to consult the professionals and say what exactly is in there for me. However, you can save yourself of the hurdles or the troubles of looking at the market almost every time when you have other jobs to concentrate on. So give that to the fund managers that are always in the market from the beginning to the close of the market, and they'll be able to do their buy and sell order almost immediately when they see there's any opportunity or otherwise in the market. So
I get you. So in terms of the energy fund now, what do you have an idea, or we can use the previous year if you, again, I'm sure what you're avoiding is to misinform on the exact figure.
Of course, yes.
But we can judge, we can look at the previous performance. Is there a data that we can easily get now if you just keep that? So what I'm saying is that what's the performance?
Okay.
Because you know that the whole idea is that there's a general money market fund. That's like the underlaying. Then, but there are stocks that are targeted, invest funds that are targeted specifically to take advantage of certain indices or opportunities. So we have Frontier chasing equities performance. Then we have these Nigerian energy chasing the energy sector.
Of course, yes.
So that's what I'm saying.
We also have dollar funds, We also have dollar funds. Okay, so for the Nigerian energy stocks, as at the last time, of course, yes, the year end of that fund is 31st of March. All right. Yes. So
which one? The energy fund?
It's 31st of March. So we've started a new year for that fund.
Okay. So what was the performance?
The performance was a very stellar performance, very interesting performance. I can't pick the exact return, but I can tell you that it was more than 100% because when I did maybe the EPS then was 2 years ago was 449. All right. So as at the last time I was doing this, it was 1,800 in terms of the EPS. So that tells you that year on year we've made over 200% in terms of EPS. So your distribution can also be very interesting. And you look at what the energy sector has done. So it's very, very fantastic. It's very, very fantastic.
That makes sense. So which other funds are available within that? You spoke about the dollar funds.
Yes, we have a dollar.
Where's the year end for that for your company?
It's 31st December. It's 31st December.
So what was last year performance? Do you have an idea of what?
Last year performance, we were able, because we bought into Euro bonds and the rest like that. So we were able to make some reasonable margin, more than the Eurobond benchmark, average benchmark.
What's the average benchmark?
I don't want to give a specific, sorry, I don't want to just call the number now because of fact checking and the rest like that. Yeah, so as of last year, the dollar benchmark average yield was around 9%. All right, so we're able to make above that as well. So so
you know the reason I'm asking all of this. Me, I'm using like I told the guests, these things are learning session for me.
Okay.
Do you get what I mean? So I'm using it to take time to understand the market. So I'm like, should I say selfish first? I have to learn about the market and know how to take advantage of it. Then, of course, by default, let people know what is available. So because the whole idea, I believe there's still something about, the product knowledge. Let's even talk about the general market first. People don't have an idea.
Yeah.
Because people are focusing on the wrong thing. Even when you're on social media, it's about different things that have no value. However, this real thing that can literally imagine somebody doing 100%. like I said, that no business can. I don't know the business in Nigeria that gives you 100% as an entrepreneur after all expense.
Of course, yes.
Do you get what I mean?
Sure.
If you have an alternative way of, propagating, and like I said, to make money, to be rich and to be wealthy as an entrepreneur or as a career person, our unifying points is investment.
Of course, yes.
Everybody must say come. That's why you see the classic example is the MD of Zenith that, about a year or is it up to a year that she bought? Was it start of this year that she bought about some billions last year?
About 10.
And now look at how much she's going to gain from that, And you see a lot of all these other, and that's the one. That one was obvious because she's the MD.
Of course,
so you can imagine what the ED did, what the branch manager did, what the this one that did. So you see people taking that stake within the business, and so people see people buying stuff. They don't know that it's coming from their residual income, from passive income.
Exactly.
So, but people go into the passive, they spend active income, which is the ESOP principle. You get it today, you spend everything rather than knowing how to move the money to generate money for you, and you can spend like I said, the child that money gives back to, rather than spending the father, the mother, generating the stuff. So that's why we need to do this to make sure that people are aware.
Yes.
On a broader scale. But I also believe, because I personally believe in the company and the product, because I've dealt with the company to say, okay, what products are available? So, of course, people will still have to, and let's put it on the screen, the numbers that they can call for inquiries and have a sit down. So that I know there are a lot of fund advisors that will be ready to
of course,
assist them. So which other funds would you like to also want us to talk about within the funds that we have within the business?
Yes, then we have the normal placement as well. Where you can place, if you don't want to buy into any of those funds, so you can place more like a fixed income and say.
Actively now, I think there are how many portfolios do we have in SCM? Like the dollar, the NIC, about 4 or 5 or more?
Yes, we have the Skip and one other one. So we have five of them. 5, yes. Okay. We have 5 of them currently.
Which one is Skip?
Yes, it's more like the normal fixed income placement as well.
Okay.
All right, so that is not a fund. It's more like a placement.
Okay.
All right, so where we'll discuss on the rates at which you want to get it in. Maybe when you make $1 billion or $2 billion, you discuss the rate. This is the rate I want: 10%, 15%, 20%.
Okay, is it more like fixed, fixing money?
Yes, exactly.
With you guys. Okay, so you trade with it in turn.
Yes.
But what's the minimum entry of that?
It has no minimum entry. It just depends on your capacity as well.
Okay.
Right? Yes. So it depends on your capacity. Though it's graded into the more you bring,
of course, the more
the
definitely.
Exactly. Yes.
Definitely. But the whole period is mostly the tenure will be the 90 days minimum, or
yes, as regards that, yes, the holding period 90 days, all right, which means that you can withdraw before that time for the 90 days and the rest like that. It's just that there will be a penal charge there will be a penal charge on your interest income. All right, yes, of course, yes. So that's just it.
So at least let's look at it now. The frontier is still available.
Very much available.
Money market is available. The dollar is available.
Yes.
SCF.
It's not really available. Exactly.
Yeah, because I was asking about that. Of course, I think we're working on getting maybe an extension to see how more people, maybe you can raise more, as in allow, but I think at the right time, information will be available.
Yes, we are really working on that.
Also because I'm looking forward to really taking part in that. So that's but I think in the meantime, Frontier will be a good one to balance it. So again, for risk purpose, it might be be good to divide your money into two. Play the money market, which is fixed guarantees. Then you can do Frontier to manage the volatility. Either ways, imagine that you are doing a net return of maybe on the aggregate 50%. And the way things are now, at least the fundamentals are stronger versus 2008 speculative era. So I believe that the market will still keep doing well. The companies that are really using the money, it's not rat tripping.
No.
They're using it to do real productive work.
Yes, exactly.
The consumer market, the this and that. So everywhere seems to be robust. And I believe that the outlook, personally, again, consult your advisor. But for me, the intuitive and even in terms of using data, I can say that in the next 2 seasons or 3 seasons, the market will keep on doing well. There'll be some form of adjustment and market corrections here and there, but overall, I believe that the market is on a very good trajectory.
Exactly.
Yeah.
Exactly.
So, before we round up, now I want us to look at this topical issue of the week, which is the election, the 2027 election. We know that in the next 1 week, I think already forms are out. Primaries will happen in the next
this month, next month.
Next month. It's mostly this month, because by May 20, for example, nobody can move again from what we heard, and a lot of last minute moves is happening.
Right
Obi Kankozo have moved over the weekend. They didn't even wait till Monday, because the month you take time, then we're still looking at what's going to happen with the ADC, PDP, everybody. So everybody is ready. So what is the implication? Of course, you can use historical data, but that's not going to be a total prediction of what will happen but at least let's have an idea of what you think about the implication of the election on the general market performance.
Okay, yes. Prior to 2023, I think the market usually reacts to the political environment. Of course, it dictates exactly what's going to be happening in the market as well. So who is likely to come in and what's his policies, manifestos, and the rest like that. Right now, the major frontline candidates for the presidency, they seems to have the same policy, right? It's just the approach will be very different. So, and with the current administration, it's done a whole lot in terms of the macroeconomic reforms that I don't believe any other person that will be coming in after him will want to change that direction. So investors have seen the stability and the prospects of the economy, all right, irrespective of how they gain as lagged a whole while to get into time. However, the market still believes strongly on the current administration to pull through in terms of the crisis we are in. So the market has absorbed those shocks before now, and they are consolidating on the gains they've made after that shock. So I don't see any negative reactions into the market. All right. What we were thinking before now that would create a major negative impact in the financial market is that election. But right now, everybody seems to have relaxed now in terms of election. The other side is the insecurity as well, which is also been taken care of from that end of the market. But in terms of the various macroeconomic indicators, in terms of inflation, exchange rates, and a whole lot of others as well, you've seen relative stability in that environment, which is feeding positively into the financial market. So investors are just going all into the market or the election cycle as well, knowing fully well that nothing fundamental will change and that will impact the financial market.
So at least the outlook is still very stable and promising from the standpoint of the...
And likely predictable as well.
Yeah, makes sense.
Yes.
Okay, so that makes sense. I think we've covered a lot for this week, and I hope that the viewers would make a certain decision based on some of the information we're passing across. But of course, we'll come back to you next week again to give you an update of how the market has performed, and for the week. Well, before you go, and scroll past this, I want you to subscribe to our YouTube channel. That's the B360 and also SCM Capital, and of course our social media platforms too. The reason is because we don't want you to miss out on any new content that we're dropping. There's still a lot more that we're going to do on this show. There's a lot of deep dive that we still have to do in subsequent episodes, but at least the fundamentals, we're just trying to build that building block. And also please share this content, share this video, and more importantly, please call the number on your screen so that you can make further inquiries, like further deep dive. So as we're done now in this studio, I have to still even ask him 1 or 2 questions for myself. So let's take advantage of all this information that is coming out free And we're happy to always come to your screen every Friday. Thank you so much and keep winning. See you on another episode.